Hey everybody, Rob Maurer here, and today we are talking about Tesla stock and the S&P 500 inclusion process. We have an updated note from Goldman Sachs talking a little bit about funds that may need to purchase Tesla. We also have some news on the Model Y, and then a recently published study by the Fremont Police Department on using a Tesla as a police vehicle. Alright, so first up on the stock, Tesla's green streak has come to an end, finishing down 1.93% today to $489.61. That compared to the NASDAQ down 0.4%. And to again quickly just check on the volume as we've been doing for the last few days, it was quite a bit lower today, only about 32 million shares traded hands. That was the 201st highest volume ranked day for the last year, so very low. That's out of about 250 trading days. It was actually even below the 1 month average of 33 million shares and well below the 3 month and 12 month averages around 60 million shares per day. If you're curious why I keep talking about volume, it's because I anticipate a lot of shares needing to be purchased, so I do want to keep an eye on volume as we head into the S&P inclusion. I do expect most of the related buying for that will happen around inclusion, but who knows how much front running there's going to be. So I think if we see a lot of really heavy volume heading into that, that might indicate a little bit more front running. So it's not normally something I watch super closely, and I'm definitely not a technical analysis based investor, but just something I'm kind of finding interesting for this period of time. Quick related note, next week is the week of Thanksgiving, so the NASDAQ will be closed on Thursday, November 26th, all day, and then on Friday the 27th, it'll be closed early, so it'll be open until 1 p.m. Eastern Time. As for my schedule, I'll probably take Thursday off and potentially Friday, we'll see on that, but hopefully the 7 episodes that I put out this week, as well as 2 interviews that I did, the most recent of which is on the Talking Tesla podcast, by the way, will make up for that next week. Okay, so we've got a bit of an update here on the S&P 500 situation. A new note from Goldman Sachs has shed a little bit of light on that portion of funds that is benchmarked to the S&P 500. So remember, this is the portion of funds that their compensation is impacted based on their relative performance to the performance of the S&P 500 versus the tracking funds. They're literally just trying to replicate the performance of the S&P 500 identically. So if we look at our little spreadsheet here that we've looked at many times based on today's closing price for the S&P 500 and for Tesla, it looks like the weighting would be about 1.25% for Tesla in the S&P index. So the S&P last update they gave us said that there was about 4.6 trillion in assets tracking the S&P index. So 1.26% of that should be allocated to Tesla shares. That's about $58 billion, almost 119 million shares. And then additionally, there is 6.6 trillion in benchmarked assets. So that's what we're talking about here with this Goldman Sachs update. And 1.26% of that 6.6 trillion would be 83 billion or 170 million shares. So focusing on that slice for now, Goldman Sachs, in an updated note overnight, said, quote, of the 189 large cap core funds in our universe, 157 funds that manage around 500 billion in assets under management did not hold Tesla on September 30th, end quote. Okay, presumably here then, the 189 funds that Goldman is referring to here are benchmarked against the S&P 500. I don't have the full note, so I'm not sure if they stated that clearly, but I do think it's the best assumption we can make. So they're saying 500 billion in assets under management for those 189 funds. That's 500 billion of the 6.6 trillion that we're talking about here. So that's about 7.5% of this slice. So then Goldman is saying that of those 189 funds, 157 of them didn't hold any Tesla. That's only 17% of those funds. So we don't necessarily know how the dollar distribution looks. If one of those funds makes up the majority of that 500 billion assets under management and they hold Tesla, the dollar percentage would look very different. But for now, let's just assume it's the same at 17%. And then let's extrapolate that percentage to the 6.6 trillion in benchmarked funds broadly. Obviously, quite a few steps there where the math can break down. This is just a theoretical exercise. But if we apply that, then we could assume that of the 6.6 trillion in benchmarked funds, about 1.1 trillion of that may already have a position in Tesla, leaving about 5.5 trillion that does not. So if we drop that 6.6 trillion down to 5.5 trillion, assuming the others already have Tesla positions, if all those funds want to be equal weight on Tesla, they would need to buy $69 billion of Tesla, nice, which is 142 million shares. Obviously, they could buy more, they could buy less, they could buy none at all, but doing anything other than being equal weight on Tesla is an active choice to deviate their performance versus their benchmark based on how Tesla does. Said another way, if they don't know about Tesla, the safest thing for them to do is just to be equal weight so that it's not influencing their relative performance. If we hop back to that Goldman note, per the Bloomberg article on the topic, they say, quote, assuming those funds chose to hold the carmaker at benchmark weight, they would need to buy $8 billion of the stock, or about 2% of Tesla's market value, the analyst said, end quote. So many of you may have seen the headline or the articles about that today. That's just Goldman saying that of these funds, these $500 billion in assets under management, those funds would need to buy $8 billion to be equal weight. So they're just walking clients through the exact math that we've been walking through here for a while, but on their universe, as they say, which is just a subset, that 7.5% subset of the 6.6 trillion that the S&P says is benchmarked against the S&P 500. We've now seen a couple of separate confirmations that overall the logic we've been walking through here is correct. First, we had the S&P announcement, which indicated that, okay, yes, it's going to be about a 1% weight. That equates to about 50 billion in terms of shares that need to be bought. So check that box. And then here we have Goldman Sachs also now talking about the benchmark funds and how they would need to buy 8 billion. And that lines up well with the math that we've been talking about on the benchmarked funds. So I think good to see that. I still don't really know how all this is going to be able to work. Again, if all that is equal weight, that's, 38% of Tesla's float. You can't just take 38% of the float off the market over the course of 2 weeks. So whatever happens, we'll be here following it every day, with, I guess, the notable exception of next Thursday and maybe Friday. All right, next up today, we have an update from Green the Only on Twitter. He does a lot of investigating into the Tesla firmware, and he says, quote, 2020.44.15 firmware reveals that Model Y is also getting a new efficiency package, MY_2021. Higher range incoming? End quote. So Green is speculating here that we may be seeing yet another increase to the Model Y range based on seeing this chunk of code in the firmware. Somebody on Twitter asked how much range you might expect, and this is really just his guess, but I thought it was interesting. So he says, quote, probably relatively little. Model 3 got about 5%, so Model Y likely in the same ballpark, end quote. I just wanted to pass that along, nothing more to add, but we'll keep an eye out for any more updates. Kind of a cool topic up next here. This is a report from the Fremont Police Department. They have for the last few years been working on this pilot program to test electric vehicles in their fleet, and their test vehicle is a 2014 Tesla Model S 85. Looks like they've been running that for about a year and a half now, but the data in this report is the 12 months from March 2019 to March 2020. So they've been monitoring a lot of different factors. They put together a table, obviously including total cost of ownership, maintenance downtime, usability in police situations, officer feedback, things like this. And the overall conclusion is that, quote, through data garnered from the Electric Patrol Vehicle Pilot Program, the Fremont Police Department has concluded that it was a success and provided significant evidence that expansion of electric patrol vehicles is a feasible option, end quote. They compared the Model S to a gasoline-powered Ford police patrol vehicle, they call it PPV here, and ended up saving about $4,000 on fuel. They did have higher maintenance costs. I'm not sure exactly what issues they had, but they spent about $4,900 on maintenance for the Model S versus $2,900 on the Ford, but still had savings overall. They also found the officers in general had a much better experience with the Model S. And they also note that although only one of their vehicles in their fleet of over 60 vehicles was the Model S, that allowed them to reduce their fleet-wide emissions year over year. There were some downsides for the Model S. They had some issues with the ride height, as well as enough space in the back for police equipment. But as a result of this study, they have already purchased a Tesla Model Y brand new, and they think that will address most of the issues that they had. So they've shared this analysis. They've also published some of the tools that they used for this analysis to help other police departments if they want to try a similar pilot program. But I think it's great to see, and I think if we fast forward a few years, we're probably going to start seeing a lot more mandates from local governments, potentially on up the chain, to start converting at least a significant majority of government vehicles to electric. All right, last couple of quick things here for the day. XPeng announced that for their 2021 vehicles, they will start to add lidar. Kind of an interesting development because so far their business plan has seemed to be pretty much just copy everything Tesla does as closely as possible, which not a bad business plan. Tesla, though, has accused them of stealing some of their autopilot source code. We've talked about all this in the past, so not really trying to get into that today, but this brought up a lot of conversation today with Elon on Twitter about lidar. The Cliff Notes version of all that is that, shockingly, Elon still does not believe in lidar for autonomous driving. But there was another kind of interesting tweet in here. Somebody asked him if he saw the need to eventually upgrade the cameras to 4K and better HDR in the future. Elon said, quote, there will always be upgrades, end quote. So interesting. I think Elon may be laying the groundwork there a little bit so that people don't freak out as much when eventual hardware upgrades do come. I think there's always going to be questions about the hardware suite until an actual robotaxi situation is happening. So we'll see how Tesla manages that, but with a ton of production coming online over the next year, it wouldn't surprise me to see them take this opportunity to shift over some hardware, especially as they would be able to use those larger purchase contracts for leverage on pricing for any new equipment. Lastly here, a quick note on the 7-seat Model Y. Of course, back in mid-October, Elon had tweeted that deliveries for the 7-seater could start as soon as early December. So we have an update here from Tasmanian. One of their staff has a 7-seat on order, and their order configuration has updated to prepare for delivery status. So maybe a sign of progress there, and the timing would obviously make sense with the Elon tweet. But I do need to point out that this has actually been the case for many order holders for the 7-seater, with that prepare for delivery status going back as far as February. This may be meaningful if the status was just recently changed for this person, but I did just want to quickly point out that we have already seen this status, at least for some 7-seat orders before, and it didn't necessarily have meaning at that point. Alright, so that will do it for today and for the week. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast, and I will see you next Monday, the 23rd, for the next episode of Tesla Daily. Thank you.